Good morning and good afternoon, people. I hope everyone had a good Christmas and New Year. Today we're going to look at some of my expectations for 2023. We're also going to look at some of the short-term plays, so looking at kind of January, what to do in Q1, and that's about it really. We're going to look at crypto, obviously, as well as stocks, bonds, US dollar. We're going to try and kind of cover it all. But we're going to start with commodities, and we're going to start with, I guess, my current base case at the moment, which is commodities move in a range, taming and exacerbating inflation in line with supply and demand push and pull globally. So I spoke about that a lot in my last video. We'll get into that a little bit more. Continued longer term risk on equity weakness, but we may start to see the most beaten down names bottom and start an accumulation range and process through 2023. In this scenario, we should see a bleed on risk assets with US dollar weakness as we move in and out of recession and stagflation. Cash moves into shorter term yields to farm returns, areas of energy plus high dividend. Areas of emerging markets should play well on weakness, on weakening US dollar. Energy should play well, playing the ranges on high risk, and commodities should play well. Stay away from large cap tech and weak balance sheets. Short US dollar on major rises, accumulate favorite high risk discount stocks. Risk reward isn't brilliant at the moment, shorting much of the equity market in my opinion, but the risk reward will increase to something more palatable on a rise, and I do think we're going to see a rise in January, but we'll go through that in more detail. But just to break down and explain this, and again, spoke about this a lot in my last video, but I think that this year there's going to be quite a... we're going to be trading in a bit of a range with commodities, and I think this is going to cause inflation to come up, it's going to cause it to go down. I think just yo-yoing between inflation and stagflation worries for the majority of 2023 makes the most sense for me. And we also have a couple of different factors. We have, China reopening, we have some demand there returning, but we also have demand destruction from the Fed. So there's kind of a push-pull aspect to it. Macro Alpha actually put out a very good video yesterday, kind of confirming, I guess, some of my expectations, really. So I'd encourage you to go and check that out. But I guess this really is all about if we get that scenario, if inflation disappears and we start to see it really come down and we see commodities continue to kind of bleed down with it, to me that says that Jay Powell is winning, and the only other play that we'd have to really strongly consider is long-term bonds, so like TLT, if we get that scenario. But as I said, current base case is that we move in a range for a lot of these commodities throughout 2023 that it exacerbates inflation, but it also helps when it comes back down as well. So just a bit of a yo-yo thing all year. And yeah, we'll start with oil. And, this is the oil monthly chart here. As you can see, we're in a massive long-term range, pretty much midway between the range at the moment. If we start to get down on some, so we could get a bounce here in the mid-level, all the way back up to the top of the range. But just breaking it down onto some smaller time frames, looking at the daily chart here. As you can see here, we deviated, grabbed that liquidity there, came back under the mid ever so slightly for a moment, and then we're now back up back in this range. And this is the kind of range that I'm talking about playing in the short term. Longing the reclaims, taking profits here, maybe getting back in and playing the top of range, shorting down, and just basically playing this for as long as I possibly can. It may work out, it may not, but look, the technicals are pretty easy to follow. High risk reward at the tops and bottoms of these ranges, so we just have to kind of play it like that, I think. Corn's been the same, again, just a large range. Again, I'm already long this from the mid-level. We'll take profit at the top and maybe short all the way back down to the bottom of the range. So there's a lot of examples like that. If we look at wheat as well, another play that I'm currently in at the minute. Could come down further here, but at the moment, again, just playing the range on the daily here and looking to, essentially just play this. So let's see what we get. And that's the same for a lot of the commodities. And when you look at the Goldman Sachs commodity index, it's very much the same. Mid-level. coming down and testing this supply demand zone here, and currently looking like we should go up a lot. This is another thing to call out as well, is we've had a lot of monthly hammer candles on a lot of these commodities. You look at corn. What have we got on corn? Ooh. You see, so yeah, a lot of these kind of bullish looking candles on the monthly close. You know, coffee's another great one here. Again, right down to the mid-level here, hammering nicely. Probably going to go back up to the top of range. Let's see. But yeah, as you can see, the monthly close for a lot of the commodities was pretty bullish. So I keep fucking doing that. And again, son. Yeah, a lot of kind of bullish closes on a monthly basis. So do have to bear that in mind. And yeah, quite simply, just playing the ranges. We don't really have to overcomplicate it at all. You know, if it comes back out of this range and can't find support here, then I'll just get out of the oil long. That simple. So that's it with commodities. I hope that makes sense. Pretty straightforward, I think. You know, we've had a nice 1, 2, 3, 4, 5 correction on the Goldman Sachs commodity index here. So again, just purely playing the range. Let's see what we get. So that's it for commodities. And I guess the problem here is, and this is why it's a little bit tricky at the moment, is if we get the rise on commodities, then that is really not going to help the inflation picture. So this is what I mean about kind of ebbing and flowing throughout the year between recession fears, stagflation fears, inflation, stagflation. It just seems to be the way that things are going to go with all of those push-pull factors that we have in the market at the moment. I'm going to take a quick look at the US dollar here, because this is another one that's currently interesting me at the minute. You know, we've hit a huge zone of interest on the dollar chart here on the monthly, you know, all the way back to 2016, 2020. We've just hit that level here. I am expecting a pullback in the dollar. I've been waiting for this for quite a while, but are we going to see it? I think it's just going to be a simple ABC correction. You know, I don't expect dollar strength into 2023 just based on the fact that the economy is so weak. I just don't see it being the area where people go to find safety like we did, you know, on this rise. So I just don't see it. But again, just playing the smaller time frames here, you know, we've got an inefficiency here that we really should do, you know, should hit. So just playing the technicals, getting down to the 4 hour on this, you know, just playing the range again, you know, long the deviation, reclaim, taking profit at the top here. If we can flip this as support now, then I think that that's when we start to see a move up to around 107. So really looking to see and interested to see what we do here over the next couple of sessions. And if we can flip that as support, I think that's where we see dollar go up. And if that happens, then I think this is going to create a nice long-term entry for gold. This has kind of had me confused for a little while now. You know, taking you back to the monthly chart for gold, kind of come down to the mid-level. It's in a really tricky spot, in my opinion, from a monthly point of view. But again, just trying to play the smaller time frames and the ranges here. We've kind of poked our head out the top of this range. Are we just deviating and we're going to come back down? Definitely, if we see that move that I just explained in the dollar there. So I've currently got my eye on that. If we can flip this as support, we start to make our way up to 107. This gives us a move down on gold. I'm really eyeing the 160 level around this sort of zone to get back into the gold. So the mid-level range, and then hopefully that'll take us back up to here. But yeah, it really is all about stagflation and inflation worries really to dictate kind of what you should be doing next. And the pitch is changing very quickly, so it makes sense for me to just stay nimble, keep your eye on some of these charts, and just play the ranges, play the technical ranges for as long as you possibly can, until the picture becomes a lot clearer. Because at the moment, for me, the market does seem confused whether we're we're in recession fear mode, or are we in stagflation fear mode? I would say at the minute there's been a bit more weight towards stagflation concerns, because we have had this bullish close on commodities. We have had a rise over the last week or two. And we've seen TLT suffering as well. So like the long duration bonds, coming back down to this mid-level of this big wet range here. So at the moment it screams stagflation concerns, but that can change very quickly with any bit of macro data. So you've just got to stay nimble. Yeah, I also wanted to have a look, I guess, at just some of the areas of risk on, and why I think that we have to kind of remain open-minded that we could get some green markets in January before we come back down. And this is where it is really tricky, but when I take a look at some of the most like high-risk plays, of 2020, 2021, looking at MicroStrategy here, which, I understand is tied a lot to Bitcoin, but, look at that. We've come back down and we've retraced the entire move. We've worked through all of this inefficiency and we've come down to this pretty solid accumulation zone here. So, for me, this is a really interesting chart, because we're down at these levels here, completed a nice 1, 2, 3, 4, 5 correction there, and we're at like 40% short interest. 45% short flow on MicroStrategy in the minute. So it's heavily shorted. And yeah, we're at an interesting point, bottom of this range here on the weekly. For me, it makes a lot of sense that we come back up. In the short term anyway, before maybe going down even further. But at the moment, for me, it looks like the stage is more set for a rise. I think that's where the pain trade is. A lot of people, a lot of funds are very light on any asset going into 2023. So I think the pain trade is to the upside in the short term. Another one I was looking at, Palantir Technologies, another retail favorite. Absolutely decimated. And we're down at these levels here. We've got so many inefficiencies that we should be working through here, and at the moment, for me, it's like we're down at the bottom of the range again. Are we just deviating here? Are we going to see a level reclaim and a test of the mid-range? Do I think that we can, that's a 43% rise, and then to the top of the range, you're looking at like 60, 70%. So for me, it makes more sense to kind of look for these types of short-term plays in January, but again, you don't have to risk much at all. The risk reward here is, for this type of move is insane. You just wait for the level reclaim. Wait for the level reclaim, set your stop. Minimum, you're looking at almost a 3R. Well, yeah, you are pretty much 3 on the risk reward. And if you can get to the top range, which would be insane, you're looking at almost 6. So, there's a lot of charts that look like this. Amazon as well. Jesus, like we've come all the way down, testing the COVID, the March 20 drop here. And again, just quite a lot of inefficiencies that we could quite easily work through. Who's to say we don't get over here and fill the gap and then come back down? I think there's just a lot of charts that look like this. And then we also have to kind of consider and mention that we have the, a very put-heavy options expiry in January. And we've seen before that, when we've had these types of moves, these types of options setups where we are, in a very put-heavy options environment, we should see, or could see, the chances that we get a rise into that in January are pretty high. So it just feels like the market should try and tempt more people in here before going lower. looking at some of the indexes here. So looking at the Qs, very tricky. I mean, look, again, it doesn't have to be complicated. If we can level reclaim, then I think that we do test the middle of the range here around about 300. You know, nice squeeze up to there over the next few weeks in Jan, and then come back down. Ultimately, I do think we see the Qs testing this level here, all the way down at like 220, around about those sorts of levels. You know, it's the same with the IWM index. You know, I think that we're going to be coming back down to like the 129s area, but at the moment, just in a range. Doesn't make sense for me to be really heavily short here. You know, if we can get further move to the upside, I'll absolutely short the top of that range, no doubt about that. But at the moment here, it just doesn't feel like the risk reward is there. If we can get a move down and reject off the bottom of this range, then yeah, look, that's a short. But for the moment, I just don't think the risk reward is there, and there is definitely some signs from the equity market that that we could at least get a little bit of a squeeze before we go back down. Any other one? The SPX, pretty much the same. Yeah, so the only other thing to point to is, I guess, just the 10-year and yields in general, you know. And this is what you have to keep a very close eye on to see what the expectations are going to be, because a lot of the time the bond market moves before most. And at the minute, this isn't, you know, I don't look at this and think, we've definitely got continued downside here. To me, it looks like we could still go up quite easily. Do we have a cup and handle pattern forming here? Could we see this type of move and then create potentially new highs in the 10-year? So this will happen with a lot of the yields. You know, the 20-year here, you know, possible deviation on this range coming back down into it. That's a good sign for if you're long TLT. Is the top in on yields? I don't think you can confidently say it is. And if we certainly start to see the rise in commodities, then yeah, they're gonna have to increase the tightening. So, or at least continue doing it for longer, because that's going to be very stagflationary, and we definitely don't want that. So, if we do see commodities continue to go higher, then this will go higher. At the moment, I really want to see a break below this kind of 3.6 level. That would be quite nice to see get back into this possible range here. We'll take it from there, but I think ultimately, yeah, you want to see this move actually below 3.4. So let's see what we get. Bitcoin, let's not forget BTC. Yeah, look, I mean, at the moment, just looking at the 8-hour chart here, just in a big range within a range. You know, we've got the daily range, the purple dotted lines here, and then we've got a smaller time frame range here, and we're really just at the midpoint of the larger time frame and pretty much of the smaller range as well. So kind of in no man's land. But you know, when I look at the heat maps for Bitcoin, you know, and Ethereum, we've got an easy liquidity grab here. You know, where does that take us up to? Around about 17,300, which, you know, give or take 17.3, 17.5, it's pretty much the top of this smaller range here. So this is the kind of move I'm expecting in the immediate short term for Bitcoin. And if we can look at Ethereum, it's even clearer, to be honest. You have quite a large number of late shorts here, which look like they should get liquidated. Sorry about that. Before we move back down, where does that take us? You know, around about 1280, which is, yeah, pretty much bang on with the top of the middle of the range, the smaller range. So yeah, we're just really in the middle of the larger time frame range and the smaller time frame range again, and you know, I am expecting we should see that in my opinion. Should we not get that, we reject off this level here. I'll enter a short, but we could easily come down here, reclaim again, and make a push. So it's just about waiting, being patient, and seeing what the chart does. But that's it. I don't have anything else to really go through, guys. Yeah, nothing to really go through. The only other, I guess, thing to mention, looking at the indexes here. Yeah, QQQ, just going back to it. You know, I'll make some of these small short-term plays on some of the risk assets, like a reclaim on Palantir, then I'll try and play this sort of range, just as an example. But if we reject... Where's the chart now? If we reject and we can't reclaim this level here on stocks, on indexes, sorry, like the Qs, then I'll be staying away, but I'll be waiting to see if we can get a level reclaim here, and I think we could possibly test the mid level of this range. So bear that in mind. I hope all of that helps and makes sense, guys. Give me a shout if you've got any questions. But again, happy Christmas and New Year, and let's have a good 2023. Peace.